Здравствуйте, добрый день. Good morning, good afternoon, wherever you may be. A warm welcome to you all to this British-Kazakh Society webinar, an overview of the tax system in Kazakhstan relevant to international investors. I'm David Hardy, a director of the British-Kazakh Society. The session today will be in English and Russian, and you can choose your language with the button at the bottom of the screen. Please type in your questions using the Q&A section, and they'll be answered at the end of the session. We have a most distinguished panel today, and I'm delighted to introduce our moderator, Yerna Toizhanov. Yerna is managing partner of Magna Law in Kazakhstan and a member of the British-Kazakh Society Law Committee. He's over 15 years of experience advising clients on corporate law, mergers and acquisitions, regulatory matters, and complex legal projects. He had prior experience with the Big Four and international law firms, and Yerna regularly supports businesses operating in strategic sectors, including energy and investment. Yerna, over to you.
Thank you, David. Good morning, good afternoon, everyone. It is my pleasure to welcome you to today's webinar on Kazakhstan's tax and investment landscape for international investors. My name is Yernur Toizhanov. I'm managing partner of Magna Law Firm, and I will be moderating today's webinar. Kazakhstan continues to attract strong interest from international investors. At the same time, the tax and regulatory environment is evolving. We're seeing changes in tax rates, greater attention to substance and treaty access, new investment platforms such as Alata City, and broader policy questions around diversification and infrastructure. Today's discussion will be practical and investor-focused. We will begin with Viktor Kalgin, who will speak about tax planning for international investors in Kazakhstan, including recent tax changes and practical tax cases. We'll then hear from Lezat Zilki-Bagarova, who will present the special tax regime of Alata City, including the legal framework, incentives, investor protections, and customs aspects. Finally, Daniel Witt will join us as a speaker. Dan is going to provide some historical and international context and comments on the points raised by Viktor and Lazat from the perspective of international investors and investment policy. The webinar will last 60 minutes, including a 10-minute Q&A session at the end. Please submit your questions via the chat function, and I will bring them into the discussion during the final part of the webinar. With that, let us begin. Our first speaker is Viktor Kalgin. He is a managing partner of Global AIM and an international tax advisory firm. Viktor advises multinational companies, private businesses, and business owners on international tax planning and cross-border structuring, with strong focus on Kazakhstan and Central Asia. Early in his career, he spent almost 20 years with Big Four firms, developing deep expertise in international taxation. Today, Viktor will guide us through the key 2026 tax changes and practical issues for international investors, including withholding tax, treaty benefits, beneficial ownership, permanent establishment risks, and M&A-related tax considerations. Viktor, please, the floor is yours.
Thank you, Yernur. I hope that my slides are being translated because I started sharing them, and to make sure that everything is in order. Yernur, can you please let me know that you can hear me well, and also the slides are on the screen?
Yeah, everything is good.
Okay, thank you.
Please.
About myself, basically, Yernur told everything. I can only add that if you would like to save my contact details, you can just scan the QR codes which is on the screen, and so feel free to reach out to me, and my contact details will be in the slides. My presentation will be short, but indeed practical oriented, and it will contain two parts. I will start by a brief overview of the tax system in Kazakhstan, especially relevant for international companies with assets in Kazakhstan. And in the second part, I will review three practical cases from case law and actual real disputes between the taxpayers and the tax authorities on various international cross-border tax matters. Yeah, as everyone knows, probably starting this year, there is a new tax code in Kazakhstan, and the three main rates are on the screen. And as you can see, the trend is rather negative. The rates are either stable or increase, and VAT increased to 16% from 12% starting this year, with the threshold for registration nearly halved. Personal income tax also changed from flat tax rates to progressive rates of 10 to 15%, and corporate income tax remained unchanged. It's 12% corporate income tax rate. Next, especially for foreign investors, withholding tax are important. And whenever a Kazakhstani company pays certain types of income which are taxable at source in Kazakhstan, withholding tax apply. And rates are in the screen as well. And the good news is that rates are mostly stable. For main types of income, such as dividends, interest, royalties, and capital gains, the rate remained the same, and domestic rate of 15% applies. And for services and payments to so-called blacklisted countries, the increased rate of 20% apply. It's important that there are certain benefits and reduced rates available for investors in relation to dividends and interest. We will not go into much detail, but just to keep in mind that sometimes it is possible to apply a reduced domestic rate. And also, needless to mention that Kazakhstan has an extensive network of tax treaties, so that reduced rates apply under those treaties as well. So key tax trends in terms of general tax rules is that the rates are either stable or increase, and the thresholds for tax reliefs are low. The changes in tax law during this webinar. This is why my slides will contain a link to our website where we have an overview of more tax changes or main tax changes, especially those applicable to cross-border situations and structures. So when you receive the presentation, you can follow the link and look through our overview in more detail. And let's move on to practical cases, and this is the second part. And we'll have three real cases, three disputes between taxpayers and the tax authorities. The first one will be about the beneficial ownership of income. And this case is quite remarkable. We will see how this concept is emerging in Kazakhstan and how the tax authorities view international structures and try to challenge reduce withholding tax rates using this beneficial ownership concept. Second case will be about a foreign company receiving income from Kazakhstan and at the same time having a branch or so-called permanent establishment in Kazakhstan. And we will see some surprising outcomes of such structures and how the tax authorities tend to treat such structures. And finally, there will be an M&A, a dispute around an M&A transaction involving a subsoil user in Kazakhstan, which is also have some important practical implications to investors in subsoil sector, but also in other industries as well. So the first case, as you can see in the slides, the structure that was in place involved two joint venture partners represented by legal entities, by companies which owns 50% shares each in a Dutch holding company, which was essentially a joint venture established to invest in a subsidiary in Kazakhstan. So this is a common and relatively typical structure where two joint venture partners join their assets and invest through a suitable jurisdiction into assets, in this case in Kazakhstan. And in 2020, this subsidiary distributed dividends, paid dividends to the Dutch holding company. and obviously applied a reduced withholding tax rate of 5%, relying on the double tax treaty between Kazakhstan and the Netherlands. But the tax authorities challenged the reduced rate and argued that this Dutch company was essentially an intermediary and was not the beneficial owner of dividends, on the grounds that this company didn't have any employees, was only a pure holding company. And it was representing the joint venture partners and directors who represented the ultimate owners, and specifically and importantly, the dividends that this Dutch holding company received were actually passed on to the joint venture partners. And on these grounds, the tax authority challenged the reduced tax rate and applied a domestic rate of 15%, as if no treaty was in place. The court reviewed the structure, and it's interesting that the outcome of this case shifted during the proceedings. And the first instance court sided with the taxpayer, while the courts of appeal reversed it and agreed with the tax authorities, basically stating that lack of proper substance disallowed to apply the reduced tax rate. But nevertheless, the Supreme Court sided with the taxpayer and confirmed that the reduced tax rate was applicable, basically on more or less legal grounds that the joint venture was capable of deciding whether to distribute dividends further, and it was not restricted in its decisions in relation to income that it received. So this is an interesting case. It's not the first case, but it's one of the most detailed example where the tax authorities in Kazakhstan applied the beneficial ownership concept, which is obviously an international concept which you can see apply in different countries. And here we see how it is being applied in Kazakhstan. We'll see how this practice develop, but so far the key conclusions from this case is that attention should be paid to intermediary recipients of income, and whenever you see a company which has weak substance and distributes on income which it receives, you can expect that the tax authorities may come after this company and challenge treaty benefits that it applies. The beneficial ownership concept is a broad concept which takes into account multiple factors, including not only legal rights to dispose of income, but also employees' expenses, other activities, and cash flows, where we see mirror and back-to-back transactions. Obviously, risk is higher in such cases. So what we recommend is to review existing structures and to see not only relating to dividends, but also other types of income which are subject to withholding tax in Kazakhstan, interest, royalties, etc., to see if they stand for the beneficial ownership test. So this is the first case. The next one is a foreign company with a branch in Kazakhstan, and as you can see in the slide, there was an investor from France which had a subsidiary in Kazakhstan and also opened a branch in Kazakhstan as well. And the subsidiary distributed different types of income, including dividends, paid services, royalties, and reduced withholding tax rates applied to these payments. This structure existed for a number of years. At some point in time, the tax authorities audited the subsidiary and denied treaty benefits on the grounds that given that the shareholder, the French company which received income, had a permanent establishment in Kazakhstan, the subsidiary, the company which paid this income, being a tax agent, was not allowed to apply the reduced withholding tax rates. And this is based on rather broad and restrictive wording of the tax code of Kazakhstan, which still is more or less unchanged in the new tax code. And this problem existed for years, and there are there is a number of cases where, in similar circumstances, the branch of a foreign company effectively led to denial of treaty benefits by the tax authorities. But the good news here is, again, the judges looked carefully at the structure and concluded that for most types of income, reduced tax rates and treaty benefits were justified on the grounds that the branch was not involved in the provision of services. It was not the basically these types of income were not attributable to the branch, which I think is a fair and justified decision, because obviously the restrictive wording of the tax code denies treaty benefits, even in situations formally can be interpreted as denying treaty benefits, or at least application of reduced withholding tax rates, but by tax agents every time whenever a foreign company has a branch in Kazakhstan. The foreign company that receives income has a branch in Kazakhstan, which is unfair, I would say. And obviously, attention should be given to the activities of the branch and whether this income is indeed attributable to the branch, which is more appropriate approach. And the judges basically sided with the taxpayer on most types of income and the application of treaty benefits. Conclusions here is that attention should be paid to structures where foreign companies have branches in Kazakhstan, because this can formally prevent tax treaty benefits under double tax treaties from being applied. But the positive outcome is good news. And we see that the judges, that case law demonstrates that attention should be paid to not only to formal circumstances, but also to the substance of what's going on and whether income is attributable to permit establishments or not. Again, recommendation here: review your structures and see if you can properly justify the allocation of income to the headquarters, to the headquarter company, instead of the permanent establishment of it in Kazakhstan, and to defend using this way and relying on case law to defend application of tax treaty benefits. And finally,
one minute, please.
Okay, that's the final case. Case number 3, taxation in an M&A deal, where there was a transaction, indirect sale of 40% share in a subsoil user between the UK company, which was the seller, and the Russian company, which was the buyer, where no tax was paid. And as I think most of you know, even indirect sale of subsoil companies in Kazakhstan is considered taxable income in Kazakhstan, and the buyer filed a tax return and claimed that no tax should be paid, relying on the double tax treaty between Kazakhstan and the United Kingdom. The tax authorities challenged the reduced, basically the exemption, and importantly claimed that the subsoil user, the Kazakhstani company, not the seller, neither the seller nor the buyer, is liable to pay the tax. And well, interestingly, the court decided that indeed tax should have been paid, and that tax authorities were correct in charging the tax to the subsidiary, to the Kazakhstani company itself, despite the transaction was between foreign companies, non-Kazakhstani entities. And the only reason why the tax was not ultimately why the judges cancelled the decision of the tax authorities was on formal grounds, because the tax audit exceeded the time frame which was allowed by law. So this is an interesting case, and I think it has a broader implication, not only outside of the subsoil of the mining industry, let's say, because starting this year, the changes disallowed foreign investors from applying the so-called 3-year exemption on capital gains. This is why application of treaty benefits will be important, and this case demonstrates that basically it's not easy to apply tax treaty benefits in sale of assets in Kazakhstan, and the risk is that the charge will be directed to the Kazakhstani subsidiary itself. So this is important case for everyone who is involved in M&A transactions, tax planning, and also to restructuring projects with Kazakhstani assets. This is it. And this is the final slide with our contact details.
Yeah, Victor, thank you very much. That was very useful and practical overview. I suppose your examples also demonstrated us that international investors need to look at Kazakhstan tax issues not only at the entry stage, but throughout the life cycle of the investment, including distribution services, financial arrangements, and exits. Thank you very much once again. Let us now move from the general tax environment and court practice to one of the most important new investment initiatives in Kazakhstan, Alataw City. Our next speaker is Lezat Zhilki-Bagarova. She is the counsel at Brata International. Lezat specializes in tax law and advises clients on tax structuring, international taxation, and transfer pricing. She has extensive experience supporting both local and international businesses on tax matters across various industries, and she holds an LLM in advanced legal studies from the University of Warwick. Lezat will speak about the tax regime of Alataw City. This is a timely topic given Alataw's proposed special legal regime, autonomous tax framework, investor protections, and customer arrangements, and its intended role as a new platform for investment and economic development. Lezat, please go ahead.
Thank you, Yurnur. Hello, everyone. So today I'm going to give you a brief overview of the tax regime of one of the new jurisdictions in Kazakhstan. It's Alataw City. It's a city which is established with under constitutional law, which means that the acts of Alataw City prevail over the general Kazakh legislation. So the infrastructure will have not only its own legislation, but also own regulatory tax and customs regime. So before we proceed, I would like to note that the exact tax and customs incentives are not yet approved. So we have just a basic guideline which stems from the constitutional law itself. So you will see such words as possible, probably, because it's just a guideline and we don't know the exact tax and customs incentives as for now. I'd like to give you a brief overview of the history of Alataw. Firstly, Alataw operated as a special economic zone, but effective July, this status was revoked. So now it's a city with a special legal regime. So until September 2027, Alataw territory will be removed from special economic zone Alataw structure. And this is an important distinction because the objective was not to create a special legal regime. The objective was to create a new jurisdiction within Kazakhstan, which would have its own legislation, its own other regulatory framework, as well as established tax and customs regime. Key features of the Alataw city includes that it will have an independent administration, which will be headed by the Prime Minister of the Republic of Kazakhstan. As I have already mentioned, Alataw will have its own regulatory framework. It will operate under one-stop shop model, so the investors won't need to apply to multiple tax or state authorities. It will also heavily rely on digital governance. It will provide investors protections, as well as I have already said, a customized tax regime. As follows from the overall structure of the constitutional law, it seems that the Alataw city will be favoring such industries as technology and the digital economy, innovation, financial services, education, healthcare, tourism and entertainment, logistics and trade, smart city infrastructure, as well as creative industries. For now, it's not yet certain who and which entities will be treated as residents in Alataw city, but it's clear that only residents will be eligible for tax and customs incentives. And probably these categories will include legal entities registered in Alataw city, their structural subdivisions, It's also important to note that foreign entities will be able to redomicile in Alataw. For now, we have such opportunity only in the AFC, but not on other territory of Kazakhstan. So Alataw will be like the second jurisdiction with such opportunity. And of course, the individuals which will reside in Alataw will be treated as residents of Alataw. The tax regime is intended to last until January 2057, from January 2027 for 30 years, but probably there will be some extensions if the jurisdiction proves to be efficient. It's also important to note that the tax incentives which will be granted to investors and residents registered in Alataw will not change until unless the license of the participant is revoked, or probably the participant has failed to commence its operations within the required deadlines, or if the resident committed some other violations under Alataw Acts. It's also important to note that the Alataw legislation stipulates that its regime will act as a standalone regime. So Alataw residents and their affiliates cannot apply any other tax incentives which are offered by the general Kazakh legislation. And the Alataw residents shall satisfy the conditions for the application of tax incentives during each tax period in which such incentive is in effect. It's anticipated that the tax incentives will include exemptions or reductions in respect of corporate income tax, which will be applicable to income from the license activities, qualified goods, work, services, deposit interest, and probably some auxiliary activities, provided that the income from such activities does not exceed 10% of the annual income of the participant. There may be also withholding tax exemptions in respect of royalties, interest, and dividends paid to non-residents. As for reinvestment profits, it's anticipated that they probably may qualify for preferential land allocation, certain tax offsets, additional subsidies, support measures, maybe some modified taxable base, enhanced deductions, and special tax adjustments. However, it should be noted that the constructive dividends are exclusively excluded from this tax regime, from the tax incentives. So the investors should bear this fact in mind. As for personal income tax, it seems that it will be mostly aimed at highly qualified foreign specialists and expatriate employees. It will also offer some exemption in respect of dividends and capital gains for individuals, for non-resident individuals who will receive such income from Alataw residents. It's also anticipated that the tax regime will offer certain VAT exemptions in respect of the license activities, qualifying goods, works, and services, certain imports, certain services which are acquired from non-residents. And among the additional benefits, one can name a zero VAT rate on certain goods which are placed under the free customs zone regime. And Alataw city will also offer a VAT refund mechanism for foreign individuals who export goods from Kazakhstan. It's also anticipated that the exemption may include the exemptions or reductions in respect of property tax, land use fees, but providing that these exemptions are used for qualifying projects and assets which are located within Alataw city. It should be also noted that the tax preferences are not applicable to each and every type of activity. There are certain activities which are explicitly excluded from this list. These are narcotics-related activities, production of or wholesale trade of accessible goods, lottery operations, radioactive material activities, subsoil use and mining activities. It should be also noted that the tax incentives are intended for genuine economic activity, so they will not be applicable for profit shifting through related party transactions. It will not be applicable if the relocation to Alataw was made only for tax purposes. The tax incentives will not be offered if we are talking about passive holding activities, or if the tangible assets in questions are not developed or used in Alataw. And the Alataw Acts may provide for any other limitations or prohibitions in this regard. One of the main feature which is really important to note is that the Alataw residents are able to obtain binding advance tax ruling on their transaction. It's important because in Kazakhstan there are no binding tax rulings, so you can apply for clarification to the tax authorities, but this clarification will not be binding. In this case, the Alataw residents may receive such binding tax ruling, providing that they disclose all the relevant information and they pay a certain fee, which is yet to be determined. And it's also should be noted that for customs purposes only, Alataw will continue operating as SEZ format until January 2077, which means that the Alataw residents may apply free customs zone procedures, simplified customs operations. There probably will be some special import and export procedures, as well as flexible customs regulation under Alataw Acts. And to conclude, one may say that Alataw combines four elements which investors typically seek. It's a legal framework, which prevail over the general Kazakh legislation. It's a certain tax certainty, competitive customs arrangements, as well as administration, which is specifically focused on facilitating investment. And this is all. Thank you for your attention. I'll be glad to answer the questions during Q&A session.
Lezat, thank you very much. That was an excellent overview of Alataw City and its proposed legal and tax framework. What is particularly interesting is that Alataw is not, from my perspective, is not simply another tax incentive regime. It appears to combine several elements that investors usually look for, like a dedicated legal framework or long-term tax certainty, investor protection, and the specific governance model. And with this, I think this creates a very good bridge to our final speaker, Daniel A. Witt. Dan is president of the International Tax and Investment Center, ITIC, or ITIC, a non-profit research and educational organization which he helped to found in 1993. Among the first foreigners to discuss international tax and investment issues with the Russian Federation in 1991, the Republic of Kazakhstan in 1993, Vietnam 1996, Iraq 2004, Libya 2006, and Myanmar 2012. Mr. Witt is a recognized expert in newly opened up frontier markets. The Republic of Kazakhstan has recognized Mr. Witt for his contribution to economic development. In 1999, he was elected an honorary professor of economics at the Kazakh State Academy of Management. In 2011, Kazakhstan President Nursultan Nazarbayev presented Mr. Witt with the Order of the Stick Friendship, the highest honor bestowed to a foreigner. Dan will now comment on the points raised by Victor and Lezat from the perspective of international investors, placing Kazakhstan current reforms in historical and international context. We are honored to have you with us, Dan. Please, the floor is yours.
Well, thank you, Yunor, and it's an honor to be here with two distinguished Kazakh lawyers, and I'm going to offer a slightly different perspective as an economist. Excellent presentations. I'm going to comment a little bit and then share an economist's perspective looking at the broader investment climate. Overall, Kazakhstan's tax policy remains internationally competitive. Nobody likes to see rates go up, but they're still not too bad. I mean, it's not Singapore with a 9%, it's not UAE at 5% VAT. But remember, Saudi Arabia has 15%, and the EU VAT ranges from 17 to 27%. And I wish I was a Kazakh taxpayer paying 15% instead of my 37.5 in the United States. And for corporations, again, happy it didn't change. It's 20% isn't bad when you consider that the EU's average is 21.6. So you can say most of Europe is higher than Kazakhstan. And I believe President Tokayev and his government understand that taxation is a cornerstone of their investment climate. Real simple. And I think we get this, but it's helpful. I think we have some of our public sector friends. So a few of these things, I'm really talking to them to just remind them of the competitive environment that Kazakhstan. You've done well, you've won the competition, but it's no different than sports. You've got to keep training, you've got to keep working, or someone's going to jump ahead of you. Investment is essential for economic growth. Real simple. Nations cannot grow without both domestic and foreign investors being confident that their investments will bring a strong return that justifies coming to Kazakhstan, or for a wealthy Kazakh or a Kazakh enterprise to make more investments in their country instead of looking to the neighbors or outside. There are a lot of options. And one thing that I have to say that annoys me as I go to these international meetings, notably the UN and OECD, and they kind of suggest that people with my view who believe in the power of markets to drive growth were accused of engaging in a race to the bottom. And the allegation is really insinuating that market reforms mean cutting standards. We must reverse this narrative. Instead, we must think about how to assist countries or regions to race to the top by who can grow the fastest and deliver the benefits of economic growth to your people. By delivering to the people, I mean raising personal incomes, of course, raising more revenue for your government, and the quality of life in a durable, sustainable, and inclusive way. And I believe this is what Kazakhstan has done since independence. It's never deviated. There's been a few zigs and zags, but the trajectory has not changed. Now, that's the good news on Kazakhstan. But maybe the more competitive news is the countries around you are waking up, and you have a more competitive Uzbekistan, a more competitive Azerbaijan. Yes, they're your partners to build the middle corridor, and for many of these important projects that look to have markets to the south, avoiding Russia. But make no mistake, they're your competitors for large FDI and also competing for Kazakh capital. And I always like to remind our friends, and it's particularly important in New York and Paris, it's a simple formula that ITIC has been talking about for the last few years that captures the basic truths of economics. Everybody likes to talk about tax and development. We need tax to grow infrastructure, tax to invest in human capital. Well, there's only one way it happens. Investment plus employment equal taxes in development. Before you get tax, you have to have investment in profitable companies, and you have to have more people in the workforce. Kazakhstan's investment policy, and largely speaking, its tax policy, seems to capture this economic reality. And I think this is why Kazakhstan has enjoyed very impressive GDP growth rates over the last few years post-COVID, and the per capita income is over 15,000 per person. Kazakhstan is strongly an upper middle income country and rising. And what makes this impressive is you've got a growing population. So you've got to have more GDP given your growing population. But my concerns, and I think Victor highlighted them, are on the aggressive nature of tax administration. I have more concerns on tax administration than I do policy. And let's just look at real quick a couple of data points. In 1993, 1993, when we first came to Kazakhstan, helped with the tax code, a tax code that replaced 56 Soviet-era laws. It was revolutionary to have all taxes in one body of law. That was 150 pages. In 96, Chapter 16, subsurface user added, it was still under 200 pages. When Zainullah Kakimzhanov initiated the reforms in 2000 as Minister of Finance, Minister of State Revenue, it added some specialized chapters like tax treatment of pensions, but it was still under 300. The 2025 code is 1,107 pages. And I remind people, that's not a good thing. Simplification leads to greater compliance. That's good for the taxpayer. It's good for the Revenue Committee. And a simpler tax regime deters corruption. Let's make no mistake, and this is good for all. No one enjoys paying taxes, but the big multinationals that are in Kazakhstan, they want to comply with all jurisdictions in which they work and pay the legitimate taxes. And there are three basic ways to make this easy. One, simplifying the overall system. Two, which gets at the heart of administration, technology. Modernizing tax administrations through the greater adoption of technology to make paying taxes easier and reducing the friction in tax disputes. Again, the expansion of technology also deters corruption. And the last point, which Lizette highlighted in a bit of a way with City, that binding rulings, but for the whole country, they don't follow such a practice, really gets into building genuine partnerships between investors and tax administrations that rely on mutual understanding and trust. And around the world, Zambia, Brazil, Chile, we're seeing attitudes changing to realize the virtue of partnerships instead of the old adversarial model, the cops and robbers model of tax administration, which I fear still has a legacy in Kazakhstan. And we're reading in the global financial press, FT, Wall Street Journal, about still far too many of large disputes with your first generation investors. And this shows that there is a lacking of real partnerships and more trust must be built. I'm hopeful that the state tax committee's data-driven, risk-based approach to audits and special assessments will be a real step in this direction. I encourage Kazakhstan to work closely with the OECD with a new initiative that was announced 2 weeks ago, a framework that would reduce the number of corporate audits, especially for MNEs that already have many sets of eyes on their tax affairs. And this includes all of the large oil companies in Kazakhstan. Don't think their home jurisdictions aren't very, very carefully looking at them. Also, every one of your big projects is a joint venture. Inside those projects, the companies are auditing each other. I mean, do you think Shell wants to let ExxonMobil take more money than is legitimate? So you've got internal and external things that are happening to make sure the numbers are right before the tax committee even sets their eyes on it. And let's also remember, I'm not a fan of BEPS Pillar 1, and Pillar 2 is a complex quagmire. But BEPS 1.0 has fundamentally changed how multinational enterprises structure their tax planning and have significantly reduced the aggressive use of double tax treaties. So there is less risk to governments in budgets like Kazakhstan to get ripped off from aggressive tax planning. So that's the good side. That's the good news for the state side. I do hope with this change of behavior that it would translate to lower compliance burdens, reduce the number of audits, and have fewer tax disputes to provide some compliance relief benefits to the taxpayer. Let me say a word about the Alataw city's special regime. I think it demonstrates Kazakhstan's commitment to attracting and growing cutting-edge sectors of the economy. The vision of economic diversification that we used to dream about at investment conferences in London in the 90s, and it was a very steep hill to climb, has now become a reality. Kazakhstan has a diverse economy. It has a diverse revenue base. Special regimes like AIFC and Alataw City clearly recognize that legal, tax, and regulatory regimes matter and impact investment decisions. Let me make a provocative statement. That's what makes these things fun. Let's look ahead. If these things work for the AIFC and work in Alataw City, why not slowly reform these special regimes to the republic's the whole country's legal, tax, and regulatory regime? Let's see all of Kazakhstan mirror AIFC and Alataw in 5 to 10 years. Can Kazakhstan become the Singapore of Eurasia? But you are resource rich. Think about that. Of course, I said this about my vision of the UK after Brexit, but clearly that has not materialized. But I think there's a greater chance for Kazakhstan. And I said something similar. I wasn't a fan when I was a very young guy with no gray hair working in the Reagan administration in the mid-'80s. And one of President Reagan's initiatives were these urban enterprise zones to help bring investment to poor neighborhoods in the big city neighborhoods. I said, these are great ideas, but why not roll these out for all of America? I'm still saying it today, 40 years later. Couple words, mindful of the time. Let's look to the future. Just like oil and gas in the early 90s, critical minerals, we woke up to that. Kazakhstan woke up a few years ago. And now it's AI and digital assets. These are the new hot sectors. Again, diversification has arrived in ways we would have never dreamed at investment conferences in the 80s. But it's going to take hard work to keep moving forward. Last May, President Tokayev announced the government's new AI strategy. You were the first country in the world to develop and implement a national AI strategy. And this nicely married your energy resources with your bright and hardworking human capital. Kazakhstan, over the last year alone, has attracted multi-billion-dollar technology investments from the biggest companies in the world. You're also a leader in digital payment platforms. And yes, taxes matter. I was delighted to read about President Tokayev's decree issued on 7 July, quoting, on measures to stimulate and develop the digital asset industry, close quote. This decree proposes exempting individuals' digital asset income tax from income tax. This may be another first for Kazakhstan. I'm going to be in Kuala Lumpur later this month with about 15 Asian Pacific countries, and I'm going to talk about this. We have a panel, a forward-looking panel on tax treatment of cryptocurrency, digital assets, digital platforms, and I am going to make sure Kazakhstan is showcased in Kuala Lumpur. In closing, all of this underscores that for the past 35 years, Kazakhstan has successfully implemented the ITIC basic equation for economic growth. Investment plus employment equals taxes and development. But you must keep running and running fast. Look at Singapore, look at Qatar. They've achieved enormous success, but they haven't stopped. And that's the spirit that Kazakhstan must continue to drive. Thank you very much. I'd love to have some questions as part of the discussion.
Thank you. Thank you, Dan. That was very insightful. And on a personal note, thank you for promoting Kazakhstan on the international scene. So we now move to the Q&A session. I would encourage our participants to raise questions to all our panelists. We have around 10 minutes, 11 minutes left for the Q&A session. While we wait for the questions, I'd like to raise some questions. So we do realize that Kazakhstan is clearly trying to modernize the tax system, attract foreign direct investment, and create new growth platforms such as Alataw City. But at the same time, investors are looking for certainty, transparency, predictability, and most and foremost, probably the rule of law. So my opening question to the panel would be, from an international investor's perspective, what matters the most today in Kazakhstan? Is it tax incentives, maybe legal certainty, administrative practice, or confidence that rules will be stable over time? So who'd like to answer that?
Let me jump in as an economist, but I think we need to hear from the lawyers, because the lawyers are the ones who have the clients coming to them when they're getting screwed by the tax administration. And we've heard this. You've heard it from your clients. My dog's chiming in. It's certainty and stability. The rates, plus or minus a couple points, they're in the band. And I think while it's harder to compete on rates today than it was a dozen years ago, one of the new competitive aspects is going to be, can you rely on a tax administration? Is a deal a deal? Can you agree coming in on how things are going to work? Have it in writing. You have to plan your business. A government, so you're planning your revenue, and a revenue after tax without surprises. The government's got to plan their budget. It's win-win. So certainty and stability, but having mechanisms on the front end of entry on how you're going to get the money out. And, at the end of the day, you're sharing money. So let's agree to it up front. Let's stick to the deal. And then now, that's a big picture comment. It'll be really interesting to hear from Victor and Lazat on how these surprises come to your clients and are asking you to help them.
Yeah, absolutely. I can only agree. Can you hear me? I hope that's my
all good.
Oh, good. Yeah, I can only agree. Of course, predictability is very important for any investor because they weigh pros and cons of each investment opportunity and need to know, as much as possible about future tax obligations, because whenever a tax audit comes and tax charge is imposed, obviously, it is usually unpredictable. This is why we help our clients we monitor case law and practice and help our clients to adapt their structures to ever-changing environments. And yeah, changes are inevitable. This is why we see our mission to monitor the developments, the practice, and to help to adapt the practice and avoid surprises to the extent possible to plan the taxes in Kazakhstan and internationally.
Yeah, I also agree with Daniel and Victor because the legal certainty, I think, is the most important part. When I'm advising clients, we always start with, in theory, it's like this, but in practice, it doesn't work. Or the clients have problems like we have this provision, but we don't know how to implement it, how to apply it in practice. And we don't know how the Kazakh tax authorities will look at this provision and apply it to our client, the taxpayer. So I think the legal certainty is the most important thing. And everything else will just, I don't know, just an addition.
Yeah. Yeah, thank you. Thank you. I totally agree. Legal certainty, predictability, rule of law, and the practice, how it's built over time. And I wish, my personal hope that there would be reforms in a positive way, and there would be no often, repetitive amendments to the tax code, and so the investors can see how to manage and plan their business in Kazakhstan. Yeah. Okay. So we have one question, I think. Yeah. No, a few questions. So what about any other tax burdens foreign investors should be aware of? For example, excise taxes for producers of alcoholic beverages. Who'd like to address that?
I'd say it's not very relatable to our city because accessible goods are explicitly excluded from its activity.
Yeah.
But for other matters, I don't know, Kazakhstan tries to promote healthcare, and so certain additional accessible goods were added to the list of accessible goods, like sweet beverages. I don't know, it's a balance of caring for your nation and caring for investors. So I don't know, it's not an easy question.
Yeah.
Well, let me just jump in real quick. We've done a lot of work on indirect taxation. I've always said if a country's not blessed with natural resources, and I say it's a blessing to have natural resources, contrary to what some of our World Bank guys like to call it a curse. I always say the curse are bad government actors, not the resources themselves. But then you have to rely on indirect taxes. So Kazakhstan has a normal excise regime by international standards. The horses are alcohol, tobacco, and then recently on sugar sweetened beverages. But a key thing, as Lizette said, for health is they recognize that not all products are alike. None of them are, you could say, are healthy, but some are more dangerous to consume than others. So you've got a differential scale. A soft drink with no sugar, it pays less tax than a soft drink with added sugar. A combustible cigarette pays a higher tax than an e-cigarette, a vape, or a heated tobacco product. So you're recognizing behavioral economics and allowing taxes to factor into the pricing to incentivize consumers who already have bad habits to try to move it in the direction of less harmful. So it's a risk-based, because the theoretical purpose of an excise is to internalize the external costs or to tax the harm. And it's a recognition that there's different levels of harm. Secondly, you can't tax these harmful things out of existence. What you can do is tax them out of the formal sector, but they're fast-moving goods that are subject to a lot of illicit trade. So you've got to be cognizant of what your neighbors are doing, because if you tax too high, the stuff's, and we've seen it in Kazakhstan, a lot of illicit coming in from China. Well, and similarly, Russia saw it coming in from the Central Asian. So you've got to have some type of harmonization,
Yeah.
and you got to recognize that illicit trade is a risk if you go too high too fast.
Yeah, then apologies. We're short on
I'm
time,
done.
and there's another question, and I think we should wrap it up. So could you please comment how recent changes in taxation and tax administration, including a requirement for foreigners working in Kazakhstan or just serving as a board of director of Kazakhstan company to submit tax returns in Kazakhstan, are consistent with the attempts to attract foreign investment? So this new recent change, would like to address that. Victor, maybe you?
Well, it sounds like a critical question, but I must say that it's not uncommon to tax income from source received by directors, even though they may not be residents in a specific country. So I wouldn't say that Kazakhstan is different from many other countries where income from sources from, well, directorship services is taxable at source, and somehow it should be reported. Well, the compliance requirements may vary, and sometimes it's easier to pay this tax at source by the tax agent, but otherwise, it's not uncommon, I would say, this rule, this kind of situation.
Okay, thank you, Victor. So thank you to all our speakers, and thank you to everyone who joined us today. Today's discussion showed that Kazakhstan remains an important and attractive jurisdiction for international investors. But it also showed that successful investment now requires careful planning, strong understanding both of the tax rules and the policy direction. I'd like to add that we will also circulate today's presentation to all registered participants of the webinar. On behalf of the organizers, I'd like to thank Victor Kalgin and Lezat Bagarova and Dan Witt for sharing their insights. Thank you for attending, and we look forward to continue the discussion.
Thank you.
Thank you.
Thank you. Bye.
Thanks
Thank you.
very much
Bye.
indeed, everyone. Well done.
Thank
Bye.
you. Bye.